Federal Reserve stepping in there, providing a little short-term interest rate relief for some folks, make things a little bit more interesting for everybody in this whole stock market of ours now, didn't they? Let's cut to the top three here. What happens next week? Economic data, not much of it. Earnings data, some retail names, but after that, you don't have much. Yesterday, the S&P 500, its loss from its July high reached 10%. That makes it an official correction, whatever the heck that means. So no better time than to send the bulls and bears to their respective corners. We've got a weekend here to cool out and have a good old-fashioned debate, a conversation. On the fast line, bear extraordinaire, trading master, the king of East Hampton, New York, and South Florida, Doug Kass.
Good evening.
Hello. He called this correction on fast money. Also on the fast line, John Najarian, a.k.a. the Monster, the man who is known for his so-called balls of steel trades, names like Lend, with a huge arbitrage spread. Worked out pretty well for him. John is on an American Airlines booth at some undisclosed airport. Are you there, John?
I am here, Dylan, and enjoying the show as usual.
Well, we're glad you're part of it. The traders, of course, are with us. Dougie, you're in control of this market up until Ben Bernanke gets involved. Does he have you scared? From one bearded man to another, if you will.
Well, this is what I have to say to Cagey Karen, Lynx-Eyed Adami, X-Man and his evil twin Y-Man, Commodity Boy and Mack Truck. I think that the surgical strike by the Fed will be as ineffective as treating a cancer patient with antibiotics. I think once the injection of antibiotics wears off, the cancer is going to be back in force. And the problem is, in the current cycle, is that the non-bank financial entities have taken a much greater role in the economy and have bypassed Reg T requirements and banking reserve requirements. And those entities have been on steroids, and they've raised leverage to levels we've never seen before. I was reading a Merrill Lynch piece. You know, there are $9 trillion in assets in the hedge fund community and only $1.3 trillion of equity to support it.
John, a variety of drug references there from our friend Doug.
As usual.
Yeah. Your thoughts?
Well, that's why I'm calling you from an airport, Dylan, because when the market was down 343 points yesterday when we were buying, I bought a ticket to the to an undisclosed location, as you say, because if the trade doesn't work out, I don't come home.
That'll encourage the people, John. That's a real strong bull argument you're making.
Well, the good news is the trades did work out, and the Fed did exactly what they had to do to make it a fair fight. I mean, Dougie is 100% right. There's worries about leverage. There's worries about subprime. We know it. But the problem was that the bulls knew it too, and they were pulling back their bids every single day, Dylan. Until we finally got to a point where we were down 10%, we weren't going to see that fight. We weren't going to see a fair fight. We were going to see instead, basically the bears just rule.
Right.
And now that's ending, obviously. And at least we've moved to a neutral corner. And I think the referee was tired of just letting them stand there and foul Shaq. Hit after hit, Shaq was taken. Now, finally, the referee blew the whistle, and it's going to be a fair fight.
You don't really think, John, after 5 to 10 years of leveraging up our financial system,
thank you very much.
You don't really think that a 50 basis point cut in the discount rate is going to be a quick fix, do you?
Well, Dougie, I think that the Fed finally actually made a move, and they hadn't for an awfully long time, so at least it shows they're paying attention. And
let me tell you also what it's going to do in terms of unintended consequences.
Well, but they've got more time.
Hang on, Doug. Go ahead.
Monetary policy is in the hands of investment bankers and hedge funds, and we have this growing schism between the haves and the have-nots. I just got off the phone with Ralph Nader, so I know a little more about it tonight. And I think some are even going to wonder whether Bernanke and company have lost their way. And the Secretary of the Treasury 3 days ago said that no problema. Now, either he's a liar or he's really stupid.
Now, hold on. There's no reason to get into name-calling here, Doug. I mean, some nicknames are fine, but now, hold on for 1 second. Yeah, all right.
I haven't even started.
I'm well aware.
Hey, Dylan, here's what you really want to focus on. I mean, like I say, Bernanke really knew what he was doing this before the open. Because if he does it before the open, that lets them hit the bears rather, right between the eyes with this tough shot because it means that the expiring August S&Ps, there were 1.3 million puts, only 330,000 calls.
Macke had the greatest line midday.
I want to get the traders in here.
Kneecap the shorts.
Which side are you on, Karen? And
Well,
how do you
I have a question for Doug. It's really a serious question. It's important. When, in your experience, have you seen that taking the other side of a big Fed move like this has been the right thing to do?
I think that the 1998 game plan, the analog, Karen, has no basis in fact. Our system is really much different today and is tightly wound, and no better expression of that being tightly wound is what we've seen prior to Thursday's recovery. I don't think that's. Look, I'll respond by a fundamental question, which distills it all. How much of the prosperity in the past 5 years, in the real economy and in the investment vehicles that dot the U.S., meaning hedge funds, has been a function of the unusual use of debt and leverage? And the answer is a hell of a lot. You couldn't have said that in 98 and other prior periods.
What do you mean you couldn't have said 98? Long-term capital was levered almost 40 to 1.
Who cares? There's one long-term capital in 1998.
There was not one long-term capital. There was a lot more.
But to Karen asked the essential question, though, Doug, which is trading against the. Have you ever traded against? Have you traded against the Fed in the past successfully, Doug?
I don't think. I don't think that's the right question. I think
it's a question that I'm asking, though, and
I think it's part of the investment mosaic. I think it's a positive that the Fed is loosening, but so you know what the other unintended consequence will be: higher inflation, higher long rates, and more competition for money.
Dougie, I think that with another 50 basis points left to cut on the discount, as well as perhaps another 50 points that they could always give us on the Fed funds, I mean, those are two punches that are waiting out there in the dark.
Yeah, but John, long rates are going to go up. The consumer that's going to have his mortgage reset is going to have to pay ever higher prices for a fixed-rate mortgage.
Not if the Fed cuts rates, right?
No, you're absolutely wrong. The Fed cut today. The long end moved up. Ask Karen. Ask Commodity Boy.
Go ahead.
But Dougie, as I always like to say around here,
hold on, John. Here's Jeff.
Listen, Dougie, the sun's going to blow up, but it makes a lousy trade. Tell me about what we can do in the meantime. It's a question of time frame. I hear what you're saying, and I understand all your points, but are you shorting them right now today? And what's your time frame in terms of how this plays out to make us money on the short side, say in the XLF?
I have the foggiest idea if this rally extends another minute, another week, and anyone who says they know is guessing. I know that the financial system is imperiled, and that's why this was done. And the financial companies' estimates are way above. We have not even seen reductions in earnings estimates. The Goldman Sachs estimate in Thompson in 2008 is still modestly higher than 2007. No freaking way.
Freaking, it's a good thing it's cable, Doug, I tell you. We're not going to ask you. Go ahead, John.
I got to disagree. I really do respectfully submit.
The only thing you have going for you is the Fed.
Well, no, we've got the Fed and the fact that the bulls are making a stand now. I mean, it wasn't just the Fed today. It was the fact that the bulls woke up yesterday when the market was down 343 points. We got to the correction, and then they started to fight. Now it's a fair fight. It's not just a one-way train.
And if the tape is down 210 on Monday, will you change your view?
If what happens?
If the tape is down 210, your view is totally based upon what the tape is doing.
I got to stop this down for 1 second. Again, your best trade in the middle of this fight. The tension is palpable. Seriously, how do you navigate this?
I just wonder what he's saying about, they're going to miss their earnings estimates. Nobody thinks they're going to make them. Everybody's given up on those.
So you're saying that's already priced in?
That's already priced in. For sure, find one credible analyst on the street who isn't going to.
Who hasn't already brought those numbers down?
Excuse me.
Go ahead.
Excuse me. You just answered my question. There hasn't been a reduction in estimates yet.
Just because it's not on Thompson doesn't mean that the collective psyche of investors doesn't know that
there has not been a reduction. Someone moved Goldman Sachs' estimate down in the current quarter by 17 cents, kept 2008 unchanged. What's going to happen to the $9.2 billion of fees that were paid in M&A in the first half of 2007 and the second half of 2008?
I got 30 seconds. I need some trades. I need some trades. Who's got a trade for me?
Short the private mortgage insurers, and the system and the stock market is not ready for Radian, PMI, or or magic to fail, and one of them will fail.
John,
Continue
go
to buy
ahead.
the big banks, Dylan. The steepening of this yield curve that Dougie described is exactly what these guys want, and there's going to be fewer of them standing at the end of it. The big guys are going to be even bigger, and they're buying at a 60% discount, whereas Steve Schwartzman was paying a 30% premium at the highs of the market. These big banks are buying cheap, and they're smart.
Doug, always a pleasure. Thank you so much. Have a great weekend. John, same to you. Enjoy your flight to wherever you're flying. We've got obviously an earful here again.